Good afternoon, everybody. We want to thank you for joining. We are going to give it just another minute or two before we get started. Everybody has got on and joined, so we will go ahead and get started. My name is Jessica Ballard. Today, our host, Peter Brown, will be discussing how your firm can stop competing on price by offering Type 2 services. Before we get started, I want to go over a few housekeeping items. During today's webinar, you will be in listen-only mode, so you won't need to worry about any background noise on your end. You all should have received a link in the GoToWebinar panel on your screen where you can access a PDF download of today's slides. I encourage you to ask questions throughout the presentation, and we will do our best to answer many of those questions at the end of the presentation. To ask questions, please utilize the GoToWebinar panel on your screen where you may type in those questions. We are going to have a couple of interactive polls throughout the presentation which we invite you to each participate in. This may be accomplished by simply using your mouse to click on your respective selection. Next, I'd like to introduce Sageworks. For those of you that do not know, Sageworks is a financial information that develops financial analysis solutions. Our data and applications are used by thousands of accounting firms in just about 600 financial institutions across North America. On your screen, you can see a couple of awards. We were named to Inc. 500 list of fastest growing privately held companies in the U.S., and we were also named to Deloitte's Technology Fast 500. Finally, I would like to introduce our speaker. We're excited to have with us today Peter Brown, who is a senior consultant at Sageworks. Peter brings experience in technology, business, and financial services into his role. He's successfully navigated the challenges of running a small business in a competitive marketplace. At Sageworks, he uses his unique background to provide superior advisory services to Sageworks clients. All right, Peter, go ahead and begin.
Well, thanks, Jessica. I appreciate the introduction. Thanks for joining me, everyone, on today's webinar. As Jessica mentioned, we're going to talk a little today about Type 2 services. Specifically, we're going to look at how we can stop competing on price alone. So we're going to explore why it's essential to bring Type 2 services to our practice. We're going to define what those are exactly, and then how we can begin to implement these services in our practice. So as we think about kind of our landscape, the competitive environment in which we as accountants operate, what I often hear is that there's a drive to compete on price. There's this strong pressure to feel like ultimately business owners really care most about how much the service costs. So there was a survey conducted you can find it on Accounting Today. It's called How Buyers Buy. This was conducted about 2 months ago. And very interesting study. What it did is it surveyed business owners and asked them questions about why they selected certain accounting firms versus others, etc. And then asked the accountants the same questions in reverse. So what do you feel like the answer is? So I'm going to leave this list up here for just a few moments. This is the responses to why business owners would choose a competitor. So essentially, why would they leave your firm to go somewhere else? I'm going to leave this up here and let everyone kind of read through these. So what we're going to see is, of course, lack of industry knowledge is the number one. There's some bad fit issues, maybe broken promises, maybe inexperience or incompetence, poor customer service. But really what stands out is actually overpaying. And it's very interesting to see there's a misperception that price is the driving factor. The purple here is the response from accountants, and the green is that of business owners. You see a major misperception that price is the driving factor. Although business owners do care about price, it's certainly not by any means the most important factor. It's kind of like an old joke. It reminds me of this. A store owner purchases pencils for 10 cents a piece, and he turns around and sells them for a nickel. And so, his partner sees this behavior, and he's like, what in the world is going on? How do you expect us to stay in business if we buy pencils for 10 cents and sell them for a nickel? And the man responds by volume. And that's how we all think oftentimes. If we just reduce our price enough, we're going to get enough volume in order to really stay competitive. In order to stay competitive, a lot of the accountants that I directly work with do exactly that. They feel like I should drop my prices in order to remain competitive in this marketplace. So let's think about what happens when we compete on price alone. What is it that we set ourselves up to do by doing so? Lower price means a few things. First, it means more prospecting. We're going to have to go out there and do a bunch more prospecting to bring in these clients. We're going to have to make sure that we're proactively getting our name out there, and so that folks recognize that we have something different. Ultimately, this should lead to more clients. Hopefully, that is. Ideally, the lower prices is going to bring in more clients. But ultimately, it's also going to lead to more work. So especially during busy season where things are already incredibly overloaded with work, we're going to have a lot more work on our plate. One of the other things that this means ultimately is the more work impacts us in a variety of ways. One is less time. I mean, that's kind of obvious, right? We have less time to service the clients that we have. We also, as a result, give lower quality. And none of us really want to do that, but that's just the default. The facts of life are that, if we jump from 500 clients to having, 750, we're not going to be able to service all 750 nearly as effectively as with the 500. Which brings us kind of to the last one, and that's less value. So what does that mean? Well, instead of thinking about, are we providing a competent service? Are we providing, the service at a good price? Let's think about it like this. Are we providing value to the client themselves? Ultimately, if you do somebody's tax return, they need it done, but it doesn't necessarily enhance the value of their business. So that's really where, this is something that we need to begin to think about, is that although lowering price may mean more clients coming in the door, it also is going to mean less time, lower quality, and less value. So this makes me think of one of my favorite movies. Many of us watch this during the holiday season, sometimes year after year, but at least for most of us, I'm sure we've seen it at least once in our life. A few of y'all out there may not have seen this movie, but It's a Wonderful Life. It's definitely on my top 10 list for sure of all time. Interestingly, this movie has a great illustration of competing on price. So kind of to set the stage a little bit here, Jimmy Stewart's character, who's the main character there. Actually, let me flip back that. Jimmy Stewart's right here in the center, and he's the main character. His name is George Bailey, and he's just gotten married and is about to leave on his honeymoon. So he's here in the car with his newly wedded wife, and all of a sudden, people are yelling outside, and they're told something is going on at the bank. This is the savings and loan that George operates. He's the manager. So they look out the window, and sure enough, a crowd has started to gather around this bank. Being the good manager that he is, George jumps out to make sure that everything's all right. And his wife, of course, does not want him to go. She's kind of pleading with him to stay. But at the end, he leaves her to run back over to the bank and make sure everything's in good shape. So as he approaches the crowd, he gets kind of an overwhelmed look. It's almost like he's saying, what's going on? Or maybe even more, what am I going to do about all of these people? How am I going to manage to service all of these people who are upset and flooding the doors of my business? And of course, he gets up to the front door, and the folks are jamming him up against the gates. The reason there's gates there is because his uncle decided to lock the door. He was so scared about all the people, the run that was happening on the bank. So George opens the gate and lets them all in, and of course they all demand their money. They're scared the bank won't have enough money for everyone. They think that the rumors are true and that the bank's going to go out of business or something, and so they want to get their money now while they still have the opportunity. At one point in this scene, someone tells everyone that Old Man Potter is going to give 50 cents on the dollar. And of course this is the antagonist in the movie, the guy who's kind of the mean old grumpy man who's the competitor for George Bailey. And even though these folks know that 50 cents on the dollar is not a good situation, they're scared that they won't get anything from George. So they all start to rush out the door again. At this point, George has to stop them and convince them that he's good for the money. So he has to talk them down and convince them, yes, I will actually give you guys your money. So he starts to hand out the money person by person, and everyone gets as much as they want to take out of their account. And at the end of the day, they celebrate. All of the money from the bank was distributed to the clients except for $1. And so in order to celebrate, they lock the doors, they throw a party, because in their mind, at least they didn't go out of business. That is, today. This is a good analogy for us in the accounting industry, especially when we try to compete on price. Having low pricing may lead to clients flocking to our firms, kind of like this run on the bank, which ultimately might make us feel overwhelmed, just like George Bailey, with this influx of work. Especially during busy season, we hear jokes from others that, maybe, family members, et cetera, that we seem to disappear for a few months at a time. It's really difficult to balance that work-life, balance here with our profession. And so just like George Bailey, who leaves his bride on their honeymoon to go back to work, sometimes we, miss out on a lot of our, personal life because we get so overwhelmed during busy season. We also think about our competitors. We all know firms just like Old Man Potter, firms who go out there and slash price in order to steal clients from us. And this really forces us to compete on price in order to stay competitive. So at the end of the day, we might be barely staying in business. This is why it makes sense that we can't really, at the end of the day, compete on price. We can't go down that path because we're never going to ever be the low guy on the pricing model there. At some point, somebody else is going to be able to beat us on price. So kind of an example of this in a slightly different industry is Walmart. For those of you who aren't familiar with the history of Walmart, Walmart started in a little small town in Arkansas. And Sam Walton had this ingenious model. Basically, he went to small towns and built Walmart, which had, a massive distribution network and major ability to provide very, decent quality goods, not anything exceptional, but decent quality goods at a very cheap price. So what happens in these small towns is a lot of these general stores, drugstores, grocery stores, malls, etc., start going out of business. And you'll see that today in a lot of small towns in America, where no longer is it run by the mom and pop shop downtown. Instead, you have Walmarts, maybe not quite in downtown, but somewhere on the outskirts of this small town. And now, obviously, we all know the history of Walmart. They've become, one of the largest retailers in the world, based off of a model just like this, competing on price. So, of course, if you're Walmart, that's successful. But what if you're not Walmart? What if you're a small accounting firm just trying to fight to survive? What if you're a mid-sized firm really trying to compete for business against, somebody like the Big Four or some of the top 100 firms? Or even what if you're the top 100 and you're competing against the Big Four, et cetera? So who think through this, who fills that role, the Walmart-like role in the accounting industry? And just kind of think about that for a moment. Who in your minds fills that role? In my mind, I think it's not the Big Four. The Big Four certainly have the capacity to compete on price. They have all the resources they need, but they don't really compete on price. Instead, the Big Four really try to drive value. They try to have the highest quality service, and obviously as well the largest clients. In my mind, it's really somebody like H&R Block. We don't think of them as a traditional accounting firm because they're not. But at the same time, they also have the most number of clients of any firm in the entire United States in regards to tax returns. That's pretty impressive. Now, of course, we may say to ourselves, sure, they do mostly personal tax returns. They do a lot of sole proprietors as far as business clients. They haven't moved to corporate returns. Well, I would respond to you with yet. Ultimately, companies like H&R Block can crank out tax returns, and they can do it faster and way cheaper than any of us. If you go to H&R Block's website right now, you can look right on there and see their pricing. We're talking about at the premium tax return, we're talking $75. Which one of us can do any of our returns for $75, or at least certainly for a business client, maybe for an individual, but once we start getting into businesses, none of us can really compete with that kind of pricing. So that really poses a problem. While H&R Block may not have really dug into more corporate returns yet, again, that's a yet. I really see kind of the future of the industry, whether it's H&R Block or someone else. There's going to be people out there who are going to be able to mass produce these corporate returns, where no longer are we going to be able to compete with their prices. So this leads us to the question, what is your value proposition? And at this point, what is it that differentiates you guys from the competition? So at this point, this is where we're going to ask the poll question. So I'm going to turn this back over to Jessica here.
All right, thank you, Peter. So today, our first poll question is going to be on what makes your firm unique. And I'm going to give everyone just a few moments to go ahead and answer. And for those of you that are listening in, the responses are price, quality of service, expertise, or industry niche. All right, we're going to give it just a few more seconds here. Okay, it looks like we went ahead and we got all of the responses in, so I'm going to go ahead and share the results here. Zero of you said price. Nobody selected quality of service. It looks like everybody selected expertise, being how your firm is unique. So I'm going to turn it back over to Peter to elaborate on that.
All right. So thanks, Jessica. And of course, I would hope after the introduction to that webinar, this webinar here, no one would say price. That's a good thing. At least, you know, if maybe think to yourself and really determine, hey, is price really one of the things that I think does differentiate me? But as far as quality of service, obviously didn't really get any answers there. Ultimately, it sounds like expertise is something that that everyone, for the most part, feels like is the driving differentiator. Well, let's just think about that for a little bit here. You know, you have expertise. What about the firm down the street? Do you think that they also have expertise? I would actually say that, you know, with almost no exceptions, there's of course firms that I work with on a daily basis that don't have quite as much expertise as others. But the accounting profession in general is actually a very expert industry, especially if you're talking about firms where there's CPAs. You know, the CPA exam is not easy by any means. And of course, you all have to have CPE, 40 hours every year. In general, accountants are a very professional industry. Folks all have expertise, and of course on varying levels. But for the most part, I'd say yes, expertise is absolutely crucial. But it's really not what differentiates most of us from others, because all of us have some level of expertise. What's interesting, if we think back about the survey that was done earlier, the number one answer from business owners was why they chose a competitor was actually lack of industry knowledge. Now, we're not going to really address that today, but I just, you know, I think that's an interesting point when, and zero of y'all actually responded with industry niches. The one that we really want to focus on here is quality of service. So that's where we're going to be talking about, you know, today, type 2 services. We're going to talk about adding some value to your services. So as we continue, let's just think about, you know, a thumbprint. You know, what is it that makes us unique? Obviously, each one of us has a distinct thumbprint, and that's why, you know, the police will use that in criminal investigations, et cetera, because it really differentiates us from everyone else. And so I know we kind of already have thought through this a little bit, but as we're going through the rest of the webinar, I'd really encourage every one of you to, you know, jot down some notes as we go through. Think, what is it that makes you unique, and how are you going to use that in the context of these type 2 services? So really what we're trying to do here is build a proactive, prospering firm. That's kind of the goal here, where we have this unique value proposition that we are going to set ourselves apart in the industry. Now, there's a famous book called The Trusted Advisor, written by David Meister, and it's really interesting some of the things that he talks about in context of additional service offerings. So these, you know, type 2 services. You know, he talks about how the more additional services increase our impact on a broader range of our clients' business issues, as well as deepen that relationship, this begins to make us that trusted advisor with the clients. So as we all know, as the relationship deepens, we are able to create a client who's really a lifetime client. You know, the folks who we've become that trusted advisor for, we're handling all their business needs, all these issues related around finance and anything that they need help with, we're there to support them. And as we think about kind of what time of year it is now is kind of that best time of year to be reaching out to your clients with additional service offerings. So, you know, obviously, as we start getting into extensions, it's going to be harder and harder. But then we'll have some free time again in November through, you know, kind of maybe mid to early January. Some of y'all kind of fluctuates, depends on what you do, as well as kind of your own specific client base. But think about that as we're going through. Right now is really a crucial time to be rolling out some additional service offerings. So we've thought about why we should offer additional Type 2 services. Now let's really define this. What is it? What is a Type 2 service? You know, some of us may have heard that term before. The term certainly was not originated by myself. If you want to look more into it a little bit, you can see more information of the 2020 group talks a lot about this. So what we're going to do now is think in the context of Type 2 services. First, I think we have to think about what are Type 1 services. So by defining that, it's really easier to kind of see what is not a Type 1 and therefore a Type 2 service. So Type 1 is mainly focused on regulatory requirements. This means it's really all about compliance, which makes the service a commodity, something that can be bought and sold. Ultimately, price is what drives everything. Instead, Type 2 services are all about adding value, not to you, but to your client's business. So things like analyzing their financial and operational performance, or helping them come up with meaningful benchmarks to track their performance. Ultimately, helping them think to the future, helping them plan accordingly with forecasting and maybe coming up with valuations for succession planning, etc. These are the services that are really Type 2 services. And it's interesting from a presentation by Alan Colton, the more services that we provide, the higher the retention rate. It's kind of a common sense, but it's really interesting to see the statistics. With one service provided, we're only talking about 1 out of 10 of our clients sticking with us for that 10-year period here. But when we get down to 5 services offered, maybe we're doing their tax, we're doing their payroll, we're doing their bookkeeping, we're doing reviews, we're doing consulting work for forecasting, etc. 98%, so nearly 100% retention rate. That's really substantial. So as we think about these additional service offerings, I think we have to ask ourselves the question, what percentage of our clients are interested in learning about our additional service offerings? So again, this comes from the How Buyers Buy survey. I think it's really interesting to kind of see what percentage of our clients really want to know about our additional services. 44%. That's a pretty substantial amount. When I speak and do engagements with clients throughout the accounting industry, I consistently hear, oh well, maybe 10%, 25%. We're talking almost 50%. Almost 1 out of every 2 of your clients really is interested in learning about your additional services. A lot higher percent than normally what most people think. But this really begs the question, are they aware of those service offerings? And here, the survey shows only 1 out of every 3. So only 33% of our clients actually know or are aware of the services our firm offers. A lot of times we think, well, of course, we're a full-service firm. They ought to know. But what have we done to actually, make them aware that we provide, forecasting services, or that we provide benchmarking services, or that we provide, full-scale consulting services, etc. So this is really where we need to start thinking about, specific new services to offer. So I gave a couple ideas earlier. I want to now kind of hone in on one focal one here. But before that, let me tell you just a little brief vignette from a client that I worked with recently. He owns his own CPA firm in Dallas, Texas. It's a small, tax-only shop. So he has about, 8 or 9 employees and himself. He realized that his services were really becoming a commodity. He wasn't able to compete with some of the other people in his sphere. He was losing a lot of his clients to these other folks who were able to undercut him with price. So he used some software tools that we kind of talked through and helped add to his service offerings to add some value to his engagements. So instead of just handing them a tax return, he would add some additional, analysis along with those returns, which really could drive some of his client engagements. So throughout the year, he was able to streamline his billing cycle. Instead of having all of his work just during tax season, he was able to kind of, make that throughout the rest of the year as well, drive some additional engagements, especially during the summer months. As a result, what happened was he was able to reduce the number of clients that he had. So he was really overwhelmed with his client load, him and his staff. And as a result, he had kind of high turnover internally with his staff. As a result, now he's actually been able to reduce the number of hours that his staff is working. So even during busy season, he's only having his staff work about 50 hours a week. That's pretty incredible. Even during the middle of tax season, he still only is having his staff work 50 hours a week. I was really shocked when he told me this because that's a great work-life balance. And of course, during the rest of the year, he really even tries to get it below that. But what's interesting is that what he did really was he increased the value of his engagements. He was able to get better clients, not the ones who were going to not pay on time. He was able to get good clients that paid their bills on time, that were a pleasure to work with. And so that's really where these new service offerings are going to set you and your practice apart within this competitive environment. One of the things that I want to think about is specifically financial and management planning. This is kind of a broad term, but it's something that a lot of accountants that I work with don't really think to offer, financial and management planning. So I want to read this quote from the Journal of Accountancy last month. Neil Amato said, the problem known as confirmation bias crops up when decision makers place too much weight on information that supports what they already believe. It can reinforce, if not lead to, excessive optimism and overconfidence. You see, the issue is here that business owners, management, etc., all starts to kind of get focused on the goal. And instead, they forget that there's outside perspectives they really need to get. They kind of get tunnel vision. That's where we as the financial professional, the public accountant, not obviously an accountant in the industry, but a public accountant is really able to provide that third-party perspective here. So increasingly, accountants I work with are heading toward that interim or outsourced CFO work. Now, we may say to ourselves, well, of course, with small businesses, they don't have a controller or CFO, so I can be that outsourced CFO. But a lot of my clients are these mid-sized clients, so it doesn't really apply. Well, I would actually say, sure, you may not be an outsourced CFO for them, but you still have the ability as a public accountant to be an objective third-party perspective. There's no question the CFO controller as well as management team really values that objective, unbiased opinion. That's why we're kind of seeing a trend within the industry, or industries rather, within the sector, that is, the CFOs, controllers, seeing the need for more and more benchmarking, for example. Because what they're trying to do is they're trying to get that third-party objective perspective. So I'm just going to flash up here. This is CFO.com, and what you'll notice is that under the Strategies tab, some of the key strategies that CFOs are starting to incorporate, the top two are benchmarking and forecasting. So let's think about that. Why are they doing benchmarking and forecasting? A couple months ago, William Fusler on CFO.com said this. He said, while the nature of the finance function has historically been to analyze past performance, risk is inherently forward-looking. You see, a lot of businesses are finding more and more that they have to manage risk, especially in light of the housing market crisis. It's in light of the recession that we've kind of all weathered through the last 4 or 5 years. They're realizing it's incredibly crucial to manage risk within their business. That's where a lot of CFOs are beginning to trend. as well as many companies are even hiring new people entitled CROs, Chief Risk Officers, where they have a designated role for people who do nothing but manage that risk. But for smaller companies or mid-sized companies, a lot of folks are really doing that with the CFO role. That's also where a lot of us as public accountants can fit in. So some of the ways that I see this play out is, helping to track KPIs, key performance indicators. These are things that are meaningful in their industry in order to monitor their performance. And in order to do so, they don't have to just be reactive. By monitoring this on a regular basis, they're able to proactively give performance metrics to their clients. Also, some other ways that I see people doing this is creating forecasting models. This is where they can project future performance and create some what-if scenarios to manage that risk for the business. So what that might look like is they come up with best-case scenario, worst-case scenario. What I'll also see a lot of people do, though, is not just do best and worst-case scenario. They'll also come up with a likely case. So they'll kind of have 3 different options. So by creating some sort of projection, they're able to plan, help the business plan for best, likely, and worst-case scenarios. So what this really, I think, leads us to start thinking about is how we can start to implement this. What kind of approach should we use? So at this point, we're going to ask the second poll question, and I'm going to turn it back over to Jessica here. Just a moment.
All right, thank you, Peter. As you can see on your screen, the second poll question is, how do your clients want to be approached about additional services? For those of you just listening in, the 4 selections are by email, by phone call, by personal visit, or by a golf game. I'm going to give everyone here just a moment to answer. All right, it looks like just about everybody here has went ahead and selected a response. I'm going to go ahead and show these. 50% of you chose email. Nobody chose phone call or personal visit. And 50% of you chose golf game. And I'm going to go ahead and turn it back over to Peter to review.
All right, so let me hide that there. And what, I think that's really interesting to see kind of the responses. I actually put that golf game in there intentionally. I'm glad that some of y'all did respond. I think that's a great way to network, to market, and ultimately drive relationships with your clients for sure. But at the same time, there's no question that sometimes you need to really get down to business, and that's really where those personal calls and visits come in. It's interesting, though, that 50% of you all said email. And I know email is really easy. And a lot of us say, well, our business clients don't really want to be bothered. Or, maybe they, I'm just a little bit, I'm uncertain about how comfortable I am talking about my new offerings in person. So, I think it would just be safer if I write it down and have it clearly worded. Well, what's really interesting about this from the survey we've kind of been tracking throughout the webinar here is the How Buyers Buy survey. The number one way, and of course email is there, no question. Unfortunately, golf games are not listed on here, but I think that's a legitimate one, by the way. But the number one thing here is personal call or visit. 50%. So half of your clients want to have a personal call or visit. So what I think this really leads me to recommend to our clients that I work with is use this time of year, especially when you're not into busy season, or maybe you're starting to get in there in the next couple weeks with extensions, but say you're not doing extensions or not a lot of them. Use this time of year to show your expertise, what you specialize in, whether it's your industry niche or your practice, what you can differentiate yourself with, but really make sure you use this time to get in front of your clients and just tell them. Just tell them, hey, these are some of the additional services that I offer. I think you'd be amazed at the interest level from your clients of how many of them really want to know what you offer. And this is really going to help drive your clients to become deeper relationships over time. That's where you're going to be able to have those golf games because, this is a lifetime relationship. That's where you're going to become that trusted advisor. So kind of as we recap, let's think about, what we've covered today. Competing on price may seem, excuse me, like a good idea. But ultimately, it creates a whirlpool that's really difficult to get out of. Instead, we as accountants need to be proactively building a practice that adds value to our clients, one where we offer more than just required compliance services, the services that are kind of a commodity, especially as the industry begins to shift, as technology enables companies to really go bottom the barrel and beat us, all of us, on price. Those Walmarts, the H&R Blocks. Although there's a variety of additional services we can provide as financial professionals, we looked at just a few of these additional services. So specifically, we looked at providing outsourced CFO or interim CFO work. Otherwise, you could also think of it kind of like as that third-party objective outside person who can come in and speak authoritatively about what's going on in the industry, what's going on, with the financials, and give that outside perspective. So in addition, we also thought about how we can use our financial knowledge and skills in order to be proactive rather than reactive when it comes to our clients' performance, where we're adding valuable services valuable to our clients. Not just what we think is valuable, but truly valuable to our clients. And by adding these valuable services to our practice, that's really what's going to set us apart from the competition, not price. So at this point, I'm going to turn it back over to Jessica, and she's going to kind of field questions that we have here. And I'd love to hear any questions that anyone has here.
All right, thank you, Peter. Before we get into our questions, I would like to ask each of you one last thing. Some of you have heard of ProfitCents before, and based on our webinar today, I would like to know if each of you would like to receive some more information. So if you would like to hear a little bit more about ProfitCents and what it is that we do and how we can help you with your client engagements, please just go ahead and select yes, and we will make sure to reach out to you. If you're already a current customer, we appreciate you being on this webinar and hope that you have learned some key things that you can take away and put into practice now. We will go ahead and give it just a moment here. All right, and if you have any questions, please feel free to type those in at the question selection box on the side of your webinar. All right, it looks like we got all our answers in for the poll question there. Thank you very much. All right, Peter, it looks like we do have one question. What kind of KPIs do you recommend we track with clients?
Oh, that's a good question. So, I definitely think there's a couple key things to keep in mind here. As far as KPIs that you want to be tracking with your clients, there's going to be two really crucial questions you're going to want to ask. One is, what is it that makes my client unique? And the number two is, what makes their industry unique? So, obviously every industry is going to care about net profit margin. Every industry is going to care about general things like liquidity, et cetera. But some industries are going to have different financial and operational metrics that they need to be tracking. So, for example, if we think about the restaurant industry, it's one that most of us are familiar with, we might think about, sales per seat. That's a great KPI that I've encouraged clients to use. It's going to track the size of their restaurant in comparison to their revenue. It's a great way for them to see, maybe I need to expand the size of my restaurant, or maybe I'm not utilizing all my space effectively. So it's a great way to track kind of financial as well as overlap into operational performance. So the second one would be specific then to the client themselves. You may know that, this client will say, just to continue with that restaurant example, maybe your client is young, they're 25 years old and just starting their first brand new restaurant, and they're really looking to grow, and they, as a result, selected maybe a rundown building, and maybe you want to help them track their sales per square foot, because it's a really tight, small, confined space. So you help track that for them, and over time you can actually help show them the need of why they would actually be more successful. They would drive increasingly strong revenue by actually paying just a little bit more on rent, but getting more folks in the door. So that would be kind of an example of how you might go about thinking about what KPIs you might want to start tracking.
All right, thank you, Peter. And before we have one last question, I am going to switch this over to our last slide here. And this is going to be our resources section. So if you guys do have any further questions for Peter, please feel free to reach out to him via his cell phone there or the link provided. We also have some great white papers that talk about how to benchmark clients, type 2 services, how to win new clients. So please feel free to access each of those white papers to learn some more information. And lastly, Peter, we have one last question here for you. A lot of small businesses are not sophisticated enough to need these types of services. How can I get them to see need for them?
Yeah, it's interesting. I get that question a lot. A lot of clients that I work with will say, well, my clients aren't large enough, or they're not sophisticated enough. Exactly as you put it there. They don't really care about this kind of secondary, type 2 services. I would actually, disagree with that on a couple of parts. One is that the number one thing is that they are the ones who need the most. These small business owners, the ones, the moms and pops, they're the ones who need the help, the financial, operational, et cetera, analysis the most. They're the ones who need that kind of outsourced CFO. So just from a need perspective, that's the first thing I'd say. Well, secondly, rightly so, I hear people say, well, sure, they need it, but they don't really get it. They don't really get that they need it. And again, from my experience working with a lot of small business owners, I'd actually say that's not really the case. Think about it like this. What if you were able to show them in a very quick and easy, forecast, for example. Say you took their financials and you did some regression analysis, forecasted out what their performance would be over time, and very quickly showed them, a what-if scenario. What if I was able to get, for example, my, I'm a restaurant, again, kind of to keep with that same vein of thinking, and I was able to reduce my inventory days by just a few days. What would that impact be on my cash flow? And you could actually show them, how that would impact. A marginal improvement would impact their business incredibly. Now, that may sound far-fetched, but let me give kind of a real-life personal story here. So I was actually, when I was a younger man, running a small restaurant. And, my restaurant was a chain and fast food, and when I took over the store, the store was running some of the worst drive-through times in the region. I just made a couple small changes, and one was I made all of my cooks start wearing headsets so they could hear the order coming in as it was coming in, not have to wait for it to pop up on the screen. As a result, over the next few months, my store went from being almost dead last in drive-through times to being #1 in the region every single month. we cut our drive-through times in half by doing that small marginal change, just making every cook wear a headset. So, just to answer that question, I think even these little things can really make a big impact with a lot of these small businesses.
All right, thank you, Peter. Lastly, I just want to thank everybody for joining today. We appreciate your time, and we hope, again, that you have learned some great things that you can take away and put into practice now. Thank you, Peter, for presenting. You will be receiving an email from me shortly. It will include a recording of today's webinar for you to refer back to or to share with anybody else in your firm. If we didn't get to answer your question, please expect a follow-up from us soon. And for those of you that answered yes, that you would like to learn more about ProfitCents, we will be reaching out to you soon as well. Thanks again for joining, and please enjoy the rest of your day.